heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Ed Ludlow here in San Francisco. Caroline Hyde off this week. This is Bloomberg Technology. Coming up on the program, the banking fallout continues. We'll bring you the details on SVB's bankruptcy as hearings continue in Washington. What does it mean for Silicon Valley founders and VCs? And more than 1,000 tech heavyweights call for a pause on the artificial intelligence boom to implement safety protocols. We'll break down what's inside the petition. Plus, chip stocks getting a boost as analysts upgrade Nvidia, and Micron issues an upbeat forecast. We'll discuss what's driving momentum. But first, let's get a take on the markets. Technology, a big driver. We're fully in risk-on mode, seeing outperformance in the Nasdaq 100, but the Philadelphia Semiconductor Index in particular. Why? A pretty bullish outlook for the fiscal third quarter from Micron, which we'll get into later in the show. Yields also coming back a little bit. The US 10-year at 3.6%. Bitcoin kind of caught up in this risk-on rally, above 28,000, its highest level in dollar terms since June of last year. Look, it's been a good run for tech stocks in particular. Look at the Nasdaq 100, very tech-heavy index. We're heading for a pretty blockbuster quarter that's just gone. Of course, we're getting towards the end of March, a few sessions left to go. As we bring up this Bloomberg terminal, please, Mr. Director, to visualize the point that I'm trying to make. Whether we continue that momentum is all about the Fed. Remember that Thursday, core PCE, the Fed's main measure that they're looking to, that will answer a lot of questions in terms of the direction of travel for rates. That's the macro picture. Here's the micro. Katie Greifeld in New York, what you got?
Hi, Ed. Well, I have a lot of green behind me. Let's start with Micron, like you said, issuing an upbeat outlook for the fiscal third quarter. Sales expected at about $3.9 billion. That is above the average analyst estimate. You can see Micron shares up about 6%, almost 6%. Other chip stocks rising as well, including Nvidia. Shares are higher by about 2%. You had Piper Sandler come out and raise their price target on this stock to $300, so giving shares a boost. Moving on outside the chip space, Carnival also cruising today. They got an upgrade from Susquehanna ahead of, get this, wave season. Apparently that's when the cruise industry offers discounted rates. I didn't know that. Pretty interesting. Paychecks also rising as well, up about 5.7% or so. But let's talk about the banks, because that was the big story today, what happened in Europe overnight. You have Sergio Ermotti coming back as UBS CEO starting in early April to oversee that acquisition of Credit Suisse. And this chart behind me shows that in the 8 days since that acquisition was announced, you've seen shares rally, getting another bounce today, Ed.
Katie Greifeld with the movers. We'll track those throughout the hour. Turning from UBS to the banking crisis here in the United States, you're going to be looking at live pictures of the House Financial Services Committee hearing, day 2 of the regulatory consideration of the biggest banking failure since the financial crisis. Here with the details, Bloomberg's Katunga Johnson out in D.C. Fed Supervision Chair Michael Barr basically acknowledging for a second day that there were lapses in oversight, right, Katunga, of what happened with Silicon Valley Bank.
What we heard today, yes, was Barr acknowledging that there was a lack of oversight, not just from his particular office at the Fed, but even from the supervisors who were on the ground, who knew months before he was made aware of the issues. And lawmakers on both sides of the aisle really drilled down on the timing around when Barr was first alerted and how quickly he acted, even once he learned of these lapses.
You consider the questions from lawmakers, right? Senators yesterday, congressional representatives today, a lot of them focus on individual people, the pain that was suffered by depositors. You have to remember the customer base, Katunga, right? Many of these were venture capitalists and startup founders. Do we actually have any answers of kind of what the next step is, either to prevent this in the future or some sort of restitution to what happened a few weeks ago?
Regulators are really mulling whether there might be a need for them to drill down on existing rules and perhaps potentially pushing lawmakers to consider new rules around whether they should be able to mitigate some of the risks of this issue in the future. Barr in particular really emphasized the fact that he's open to, in reviewing his toolkit, have regulators sort of really work collaboratively in that way, but then also he's open to really having Congress or perhaps the Government Accountability Office really dig into the ways in which the rule book can be enhanced.
All right, Bloomberg's Katanga Johnson out in D.C. Thank you. Look, let's talk about what the SVB bankruptcy means for those depositors, startup founders, venture capitalists, tech businesses of all sizes, and bring in Gregory Germain, professor of law at Syracuse University and also the director of the Bankruptcy Clinic. First of all, Professor, welcome to the program. Your assessment of what you've heard over the last 24 hours from both panels.
Well, not very interesting, right? I mean, a lot of repetition of stuff we already knew, a lot of political posturing, but really no new information coming out of these hearings. The only thing I'd say is that, you know, every time someone asks an interesting question, the answer is, well, our report's going to be out on May 1st. So until we get the report on May 1st, I don't think we're going to learn a lot more about what was going on in the regulatory environment.
Yes.
So that was kind of my general overview of listening to, you know, a few hours of the testimony.
We broke the news of what was happening on Silicon Valley Bank on this program the Friday it collapsed. And into the Monday, the discussion among venture capitalists was that they wanted a reincarnated form of SVB to survive. What ended up happening, of course, is First Citizens came in and took some of the deposit book, but not all of it. There were lots of questions in these hearings about why an outright savior didn't come in that first weekend. What's your assessment of that?
This all happens very fast these days. You know, I mean, the run on the bank, you know, that took place over a couple of days, and everybody's panicked, and you know, and trying to get a new institution to come in and take this over is not an easy task, especially because I think the full scope of, you know, what their loan book looks like and what it's worth isn't known, and so the government kind of sold it with some backstops in place to protect First Citizens as the buyer. So it's not easy to, you know, to figure out what's going on in a huge institution like all of these large banks are today in such a short period of time and get someone to take it over.
Well, here's the main point. They wanted it to survive in reincarnated form. In some sense, it is. You know, many VCs point to SVB being a spiritual part of Silicon Valley, literally. The first institution to write a check or bank a founder when others wouldn't. What is the risk here with First Citizens taking on some of the books?
Well, I think First Citizens wants the business. I mean, they're taking over the branches. They're going to keep the employees that have all the relationships, and so I think they want to keep it. So my guess is that they're going to be working very hard over the next year or so to try to shore up trust within the community. But you know, the handover is going to take a period of time, and I expect there are going to be some bumps in the road for a short while as they ramp up to taking over all these assets and providing better supervision than Silicon Valley Bank did of the situation. But
Professor Germain.
Yeah.
Well, I just want to jump in here. You are an expert in the field of bankruptcy. You've looked closely at the situation as it unfolded at Silicon Valley Bank. How do we fix it? What happened? How do we prevent it from happening again?
Well, I don't think other than providing a government backstop against all deposits, which could be extremely expensive to the public. There's always going to be the possibility of bank runs, even just rumors. Banks are subject to, rumors spreading so quickly that people get scared. Even we've had bank runs of insured deposits, which, makes no sense. They're not at risk, but people get nervous because, they don't trust that they're going to be able to get their money out. And so the banking system is based on confidence. And when confidence breaks down, the system starts to shake apart. And so the government's real job here is to provide as much confidence as they can that the banking system is solvent.
Gregory Germain of Syracuse University, thank you for your insight. We'll keep on tracking the story. Now, all of the turmoil in Silicon Valley may be having a chilling effect on deals. Goldman Sachs just lost 3 partners in the investment bank who are exiting the Wall Street firm amid a slump in deal making, specifically focused on tech. Wall Street saw a hit to their compensation last year. As that drop in deal-making took its toll, some Goldman banking partners faced pay cuts of more than 50%. But these are 3 high-profile bankers that Bloomberg's reporting have left really focused on the tech sector, and we'll continue to track where they've gone on to. Now, coming up, we're going to turn to chips as Micron offers an upbeat forecast, sparking hopes that the worst of a kind of brutal industry slump may now be over. Shares of the chip makers pushing higher, pushing the Philadelphia Semiconductor Index with it. We'll dig into that with Bloomberg's Ian King. This is Bloomberg. Time for talking tech. First, CrowdStrike investing $10 million in Abnormal Security, a startup that helps businesses cope with compromised emails after highlighting the attack method as a fast-growing threat. It's the largest amount of cash the cybersecurity firm's ever funded through its venture arm, the CrowdStrike Falcon Fund. The 2 companies also will work together as part of a close partnership. Let's turn to chips. NVIDIA seeing its price target raised at Piper Sandler from $275 to $300. The analysts there saying the company has the ability to create new and lucrative market opportunities with its software footprint, which is still in the early stages of growth and adoption. And rounding it out also with Micron receiving a price target upgrade at Susquehanna Financial, boosting its target from $65 to $90. The analysts saying they think the May quarter represents the worst case operating losses, but believes the near to medium-term risk-reward profile is attractive given the updated price target. Now, let's stick with Micron, giving an upbeat forecast for the fiscal third quarter, sending shares higher. Bloomberg's Ian King on set with me in San Francisco. This was interesting because what they're saying is our customers have been working through inventories, but there are signs that that kind of glut or downturn that people are calling it, there might be a different trajectory on the other side.
Yeah, I think the way to sort of look at this, to frame this, is things aren't going to get that much worse. You've got to bear in mind this is a company that is on course to have its worst ever net loss. In terms of revenue, it's half the size of where it was last year. So this isn't a victory parade by any stretch, but if you believe that the chip industry is on this long-term growth path, then you're looking for points like this where things aren't going to get that much worse.
The editors of Bloomberg Opinion wrote an editorial in the last 24 hours about the CHIPS Act and the money that is being lined up from the public sector to onshore manufacturing capacity in this country. The conclusion that they reach is that actually it's a plan that's racing towards failure. They talk about red tape. They talk about the time it actually takes to set up a manufacturing facility from scratch when it comes to chip fabrication. Ironically, when you spoke to the Micron CEO last night, he is kind of asking for the opposite to increase capacity. He's saying we and our peers need to cut down our production right now. Explain that one to us.
Yeah, I mean, there's a couple of really, really important things at play here. The chip industry is as old as I am, which is pretty old, right? Throughout its history,
your words,
economic forces have determined whether you build a plant, whether it makes sense to build a plant, whether you put capacity online. Now we've got government saying, hey, here's a check, build a plant here. That's what we want. So the concern there is that we'll have this systemic overbuild. Micron was a bit more short-term, which is saying, look, we can all get back to profitability, we can all make money if we all stop putting less silicon into the front of these production lines. That's a great idea, and it's certainly, there's some evidence that has happened, but really the sort of the thing that wasn't said directly was that Samsung, the biggest part of the memory chip industry, hasn't been doing that. So the outlook for profitability there is still a little bit dim.
Outlook for profitability. I'm looking at the shares we're higher by around 5.5%. So positive reaction. This kind of terminal chart tells the story, though, that if you look at the sort of deficit that Micron faces this year, this is a big hit to profit, a big loss going back to the 80s. Yeah. Why has that happened?
It's a memory chip industry. This is the most brutal part.
DRAM and NAND.
Exactly, the storage basically in your mobile devices and your computers. The problem that Micron has and all of the other memory chip makers have is it's a commodity, right? You can buy these things in these exchanges. You know what the price is. What happens when you have a glut is you end up making chips and then you have to go out and sell them for less than it costs you to make them, and that's where Micron is.
Yeah, I mean, that chart says it all, really. That, you know, the legs kind of taken out from under them. Just very quick final, Ian, we've just got a few seconds. End markets. Basically, this is about smartphones. The data center business bottomed out in fiscal second quarter. What are the broad hopes for the smartphone market in the second half of this year?
Yeah, basically that it's not as bad as it was. And Micron gave us a picture that said maybe smartphones aren't going to collapse as badly as we'd feared. And also maybe PCs won't be as badly as we'd feared.
We've had Micron. Everyone is over the moon with NVIDIA. NVIDIA can do no wrong as far as sell-side analysts at least are concerned. Why do people think that NVIDIA is going to be the main beneficiary from investment in artificial intelligence?
Because so far they have been. So far they've
Mechanically, how does that work? What is it that's exciting?
Well, the workloads that you need to run an AI system to have these recommendation engines basically reward the ability to do multitasking, to do parallel processing. NVIDIA's processors do that arguably better than anybody else, and it's sold that story very well. All
right, Bloomberg's Ian King, not quite as old as the chip industry, but he's covered it a long time, and we're grateful to have him. Now, coming up, we're watching shares of Alibaba surge for the second day after the news that the company is splitting up 1.8% on the US ADRs right now. We'll bring you the details of that plan next. This is Bloomberg. Alibaba's massive overhaul plan boosted Chinese tech stocks overnight, with investors betting the sector's in for an overdue reevaluation as the regulatory environment improves. Shares of Alibaba surged earlier by the most since November out in Hong Kong after the news that the company will be splitting its $250 billion empire into 6 business units. Bloomberg's Isabel Lee back. 24 hours ago, Isabel, we were talking about the kind of fresh news. This is happening. Out in Asia, they've had time to digest what's going on. And also, we're hearing about development of how they'll present that plan, right?
Exactly. And it's interesting, actually, because this is the second rally in 2 days. And it really just means investors are liking what they see, because to your point, Alibaba, it's a $220 billion empire. It will be split into 6. And analysts really like this for 2 reasons. In fact, overnight, some analysts have upgraded Alibaba from add to buy. So the first reason is it'll just allow Alibaba to be more nimble, because China has cracked down on these too big to fail tech companies, and Alibaba was one of them. So now with the 6 units, they'll be a little bit more flexible in adjusting to the regulatory landscape. And a lot of analysts are really liking that. And the second reason is it will unlock valuations, because these 6 units were given the discretion to raise funds however they see. So IPO is one of them, and we know that the IPO industry has been kind of lackluster these days, so that will also help revive the IPO market.
If you go on TLIV Go on the Bloomberg terminal, I know that we're going to be covering Alibaba, briefing on their plan to kind of walk investors through how this would look. Remind us of what the business of Alibaba looks like these days. You know, we think of it on the Bloomberg Technology show as kind of an e-commerce giant. It's much more complicated than that.
It definitely is. It's so sprawling, which makes it a bit more complex. So a lot of traders have been trading Alibaba like a utility, when in fact it's more than that. And in fact, compared to its rivals like Tencent, Alibaba is way cheaper, which is why some of the analysts are saying this will help Alibaba kind of reshape its image, break it up into 6. And if among those is Tencent. So this breakup can be a blueprint, not only for China, actually, but for the broader industry here, broader world, rather. Here in the U.S., we also have too big to fail companies that U.S. regulators have been scrutinizing. But back to China, Tencent is one of them. And it's hard to imagine that this happened without the permission or the blessing of the Chinese government. So a lot of people are also saying that this might be a signal that, the crackdown in the past 2 years, it's done and dusted. And I also will bring up that Jack Ma returned, at least to the public knowledge, on Monday. So one can just speculate whether that's coincidence or that's planned. Who knows?
We're showing a chart of Alibaba's share performance relative to its valuation, essentially, earnings per share, EPS. Unsurprisingly, looking at the Bloomberg, a number of analysts upgrading price targets, but also looking at the bonds, trading volumes very high, a lot of interest in Alibaba right now. What happens next, right? Does this happen overnight? Is the investor community bracing for an instant split, an instant IPO, or is this something that is going to be protracted?
I think now investors are just really on a wait-and-see mode. But again, this likely happened with the blessing of the Chinese government. And I think more than Alibaba, they're looking to see whether this will affect other companies. So Alibaba isn't the only big company out there. There's also Ant, there's also Tencent, JD. So it'll be kind of Alibaba. I don't want to call it guinea pig. It's the only thing I could think of right now, the only word. But it's the pioneer there. It's the first company in China to do this, at least in recent memory. So it'll really be a blueprint. And that's what investors are seeing, how this will affect the broader industry in China.
All right, Bloomberg's Isabel Lee on the China Tech Beat. Thank you so much. Now, coming up, over 1,100 AI leaders and experts are urging a halt to training powerful AI systems like ChatGPT in its latest form. We're going to have the story next. One of those names, by the way, Elon Musk. So speaking of the world's richest man, he was one of the signings of the letter. And we're taking a look at the shares of Tesla, up 2 percentage points in the session, leaving EV stocks higher. I think we're going to get the delivery numbers for the first quarter over the weekend at some point, from close of play Friday onwards. We'll see how those look. I think analyst expectations pretty mixed going into that print. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco. It's going viral. Artificial intelligence experts, industry leaders and researchers, including Elon Musk and Apple co-founder Steve Wozniak, calling on developers to hit the pause button on training powerful AI models. More than 1,100 people in the industry signed a petition calling for a 6-month break from training AI systems that are more powerful than the latest iteration behind OpenAI's ChatGPT. The idea is to allow for the development of shared safety protocols. Joining me on set to discuss, technologist Sarah Gao, a former general partner at Greylock, now founder of early-stage AI-focused VC firm Conviction. I'm really happy that you're here.
Thanks, Ed.
You know this space. Many signatories to this. They're basically saying, we've come quite far, stop. We need to rethink the parameters around this. Your immediate reaction to that?
Yeah, so I would start with, AI is just an advanced form of computing. So it's like saying we're going to stop development on computing until we can guarantee.
In sort of a writing code perspective, from a layman's perspective.
Yeah, just from it's a general technology that is a tool that can be used for huge value creation and also by bad actors, right? But if you draw a comparison to computing or the internet, the move is not to call a moratorium on the internet. Yeah. It's to develop safety protocols and be transparent about access.
So you're somebody that's investing actively in AI-related startups. We'll get to that in a second. How realistic is it to ask founders like the ones that you back to just stop? How does that even work?
Yeah, so there's certainly a question on enforcement here, right? Because most of the research that would be related to developing a model more capable than something like GPT-4 is very expensive to do. So the number of labs that are capable of it, of funding an effort like that, is very few, and they're staffed with teams that are very focused on alignment and responsible development. But if a set of, largely these signatories do not belong to those labs, and so it's not as if you have people generally at the state-of-the-art calling for a moratorium. You have people who are not part of those state-of-the-art efforts.
Right, they've already done something in the field, and that's why I wanted to have you on the program. Correct me if I'm wrong, but your investment thesis is basically we should be funding and backing those that are working on technological breakthroughs that are not yet solved, right? And putting pause on development kind of goes against that thesis.
Yeah, and we'll fund basic research efforts, but the thesis of the fund is much more on the applied side. And I'll give you a few examples, but to me, it's hard to argue that we don't want to give more people the superpowers that we're developing now. So right. If that is the ability to have any person ask questions of business data in natural language, like Seek, that feels like a useful thing. If it is to decrease the cost of high-quality legal work, like Harvey, that feels like a useful thing. I'm super excited about giving people more creative skills, right? So you have people who don't know how to draw using Midjourney, or people who don't know how to code using Copilot to write code. All of these are democratizing capabilities.
Sarah, I just want to update the audience that we've reached out to OpenAI multiple times, and OpenAI have not responded to our request for comment. In the letter which was written in the petition, which I've got here, I mean, they directly call out OpenAI, so you can see why we're trying to get them to respond. The question is, this doesn't really work unless OpenAI engages with them, does it?
It does not, because they're ahead, right? And I think this is a nuanced point, but alignment, or the idea of let's make the AI do things that humanity or users want, it's very intertwined with advancing capabilities. There's not really a way to make the models more governable if we don't understand their capabilities, right?
In the petition or the letter, they basically talk about the idea that powerful AI systems should not be developed until we're confident that their effects will be positive and the risks are manageable. My question to you, say you had a founder proposal or deck hit your desk, and how on earth would one quantify or codify those two targets?
Yeah, I think, again, computing and the internet are really good analogies, right? Okay. I think there are absolutely real risks, and ones we already see today. Right? Disinformation, use by bad actors. I'm a longtime cybersecurity investor as well. People use the internet to do bad things. That doesn't mean no internet, right? Or I don't think that's the conclusion most people would draw. The other risks, I really care about access and also reinforcement of bias. But the thing to do is to address these concerns in a open and transparent way, not to call for a halt to development.
You know know of quite well many of the signatories to this letter, to this petition. Mm-hmm. Were you surprised by any of the participants?
I would say I genuinely believe that there are signatories who care about democratization of access, because I think a monopoly structure for advanced AI capabilities is good for no one. But I think the most cynical read of a letter like this could be that it's a strategic competitive move so that people can catch up, right? And some of the signatories have been on the wrong side of a technical, architectural revolution in favor of transformers, which are it's sort of the fundamental architecture that's making these AIs work so well.
You and I have discussed, and on this program we've discussed, where we're at with generative AI. And from a consumer's perspective, I can go on ChatGPT or Bard and I can ask questions and get relatively detailed and informed responses. There's much more to generative AI than that. And I wondered which areas you think we should, in the first instance, really be focused on, for example, in the legal field, and areas that you're interested in.
Yeah, again, I'd probably put some of the areas we care about into sort of new skills capabilities and then new knowledge, right? So example, as you described, would be new skills is giving people the ability to code, to draw, to create video, to do legal work. New knowledge, I think, is even more interesting. So you've seen fundamental advances in, for example, the life sciences around protein generation, protein folding. I think the idea of reducing the cost to deliver a new drug to less than $2 billion a shot feels quite important to humanity.
That's a very specific example. How does AI help us do that?
Yeah, without getting into too much of the technical detail, there are tasks within the drug discovery process that are basically approached by the industry in very expensive experimental ways today, and being able to get better understanding of biology and chemistry with these models makes the process of drug development potentially much cheaper.
You are a venture capitalist, but I know that you work deeply with, and have done for a long time, with the founders that you've backed in terms of the operation of their business. You're research driven. I know that you read a lot from the world of academia. Who should be driving this? You know, Elon Musk is a signatory. Mm-hmm. He's, reportedly started his own startup. Right. In the field of generative AI. It's very messy right now in terms of the leadership in this field.
Yeah, I think like in the end, we should have people from academia, from the state-of-the-art research labs, like a more inclusive discussion, including like nation states. Like it's very hard for me to see a governance framework that matters in the end that does not include a international nation state participation.
This has been a quite tense and serious conversation because there are risks that we're concerned about. When you woke up this morning and before you knew about this initiative, how do you feel about where we stand with momentum in this field? Actually, most of the conversations we've had have been very positive in recent weeks and months.
Yeah, I'm just genuinely very excited, right? And it's not that I don't see the risks. Again, longtime cybersecurity investor, people doing a lot of bad things with the internet as well. But my waking up experience today was my 5-year-old daughter saying, "Make me a 3-headed Cerberus unicorn dragon." Right, and the reason she believes that's possible is like we play with.
You mean using a generative AI tool?
Using a generative AI tool. She doesn't know those words yet. She's 5, but the idea that she can create these images and tell a story using her creativity with all these new skills, I think, is quite inspiring.
You had a decade at Greylock. Just tell me really quickly about Conviction.
Yeah.
Because this is a new initiative for you.
Yeah, so as of last year, I started a new venture fund focused on early stage AI. I think it's the largest value creation opportunity we're going to see this generation. And it's a very immature field, so the early stage focus and being able to understand, as you said, like the translation from research is our focus. You're
busy. You're also, of course, the co-host of the No Priors AI-focused podcast, which you should all check out. Conviction founder, former Greylock general partner, Sarah Grau, thank you so much. Now, coming up, the Golden State goes green, how Silicon Valley is trying to tackle the climate crisis. Plus, let's take a look at shares of Lululemon, which are frankly surging. As Bloomberg's Katie Greifeld put it, the explanation is there is intense interest right now in athleisure. A lot of that story, the e-commerce story, but those gains around 13.5%, the biggest jump on the stock since March of 2020. Company giving an annual outlook really above street expectations. High demand, as I said, for those leggings and activewear. More of that next. This is Bloomberg. So last night we hit the road and talked climate tech in the heart of Silicon Valley. I hosted a panel with top names from the industry about what's really driving growth in venture backing for climate solutions at the Techonomy Climate Summit 2023. Alongside me, Sophie Purdom of Climate Tech VC, Neka Kabule of Aligned Climate Ventures, and PMP Paribas Head of C-Lab Americas, Mathieu Solé. Have a listen.
The dollar value going into climate-related venture plateauing between 2021 and 2022, driven entirely by the decrease in the growth rounds,
yes.
right? So many of us invest quite early, but those large $500 million plus private rounds, those fell off a cliff, kind of right as the SPAC market also froze.
Well, that goes back to the original quickfire round. Were they overvalued? The original, 2021 was nuts, right? Yes, yes, and yes. Second quickfire round. Does the private sector or the public sector drive investment into climate tech? I'll give you an opportunity to expand in a second.
Private.
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 I was hoping you'd disagree with Emma a moment ago, and it didn't really work. So that brings me to my actual question, which is the impact of the IRA.
Yeah.
Because I want to keep this focused in the news agenda as well. I think you all agree that the IRA, through a trickle-down effect, will see dollars flow to earlier stage startups. Nneka, how does that kind of manifest itself to your mind?
Yeah, for us, we're looking at how can we support our startups so that they don't have to continuously get into that kind of hedonistic Silicon Valley treadmill of raising more and more corporate equity. So for us, that means tax credits. Those are kind of non-dilutive funding dollars that are going directly into my startup so that they can, pause between fundraising rounds or maybe not even have to raise another round. So that's really exciting there. I think the other piece is the IRA funding is hitting a number of parts of the infrastructure ecosystem, and the White House budget just got released, and they've put aside, I think, about $250 million for interconnection and permitting, environmental permitting support. So for me, it's not just direct cash that might come into my companies, it's cash that might make it easier for them to do their jobs, and also additional cash for their customers to get basically a discounted product as well.
Mathieu, a big part of what you do is data-driven, research-driven. How do you interpret the broader impact of the IRA?
No, I think it's beyond actually the dollar money, which is huge. We are talking about hundreds of billions. It's also a very strong signal for the private sectors. Europe was very concerned that maybe the IRA was never coming out because, as you might remember, it was just one vote short, I would say, on the good side. But it's a very strong signal for the private sector saying it's a good time to invest.
That was quite a lively discussion at the Techonomy Climate Summit 2023. Diverse range of views on why we should be backing climate startups and where the money's coming from. Very candid takes from those panelists. We should get them on the show very soon. Now, coming up, we'll break down the latest from day 2 on the bank hearings, so stick with us for that. Another stock that we're watching as well in the kind of green space is Rivian, gaining as much or more than 9% at one point after Needham said it's positive on the risk-reward for this stock going into the EV maker's first quarter delivery data likely to be announced next week. We'll have much more on those numbers ahead. This is Bloomberg. Federal regulators in front of the House Financial Services Committee today to testify for a second day about recent bank failures at SVB and Signature Bank. Standing by with us for the latest on the hearing is Ramp CEO Eric Glyman. And Eric, I find Ramp fascinating. Corporate card, automated finance. We've had discussions with the CEO of Mercury, for example, talked about Brex. Your company, did it benefit from the days and weeks that followed the SVB collapse?
First, thanks for having me on, Ed. And look, our whole mandate and commitment to customers is to help them spend less money and spend less time. We're happy to announce today that last year, Ramp grew by 4 times year over year. And it all comes down to our unique approach by helping customers spend less. We've helped them spend over $400 million less than they otherwise would have, automate 5.8 million hours of work, and ultimately drive a better bottom line. And so, we think events like last week, earlier this month with SVB's failure, obviously folks go out and look for solutions and dependable partners like Ramp. But ultimately, we think it's about what we do day in, day out of helping customers and businesses have a better bottom line is why we are growing.
I think the root of my question is that not just diversifying banking, but many startup founders and venture capitalists came to quickly realize they wanted to modernize how they conduct their finances. And what I'm asking you is, what lens did you have into that in the last 3 weeks?
Certainly. So a couple sets of things. I mean, first, so our primary product is really around credit. And so when we are effectively allowing companies to continue spending, no matter where they're banking, part of how we spring into action is as thousands of our customers were moving banks, we were a continuous lifeline of support to make sure that as they were moving from smaller institutions to whether it's large institutions, SIFIs, you name it, their service on Ramp was continuous, and they also were evaluating tools like Ramp that could help them get more value. In addition to that, because we work with a diverse array of financial partners, we were able to support customers in moving over $1 billion in deposits in the first 48 hours of the bank failure. And so we were there as a partner. We were there as a support to make sure there was more value out of every dollar of spend. And last, our product was a bridge and a lifeline when other products were less certain or unable to provide services.
There's a lot of discussion right now around a sort of de facto tightening of financial conditions, literally being able to access capital, whether it's venture debt, traditional loans. Is that an area where you come in and try and fill, if indeed there is a tightening of financial conditions?
You know, when interest rates go up and the cost of capital is higher, I think what's top of mind for whether it's startup founder, small business owner, or ultimately CFO, is what am I getting out of every dollar? And that hurdle for a return needs to be that much higher. I think for us, I mean, obviously part of our products, whether it's in the corporate card or in flexible finance solutions, of course we do offer credit. But ultimately, Ramp's advantage to customers is helping them reduce their spend by 4%. When you compare this to what most others in the industry are doing, of coming up with increasingly elaborate rewards programs and trying to incentivize companies to spend more, we think something like Ramp, which does the inverse, it actually helps companies spend less and get more out of every dollar, are not just useful in every kind of time, but frankly, that much more valuable when capital does not come cheap anymore.
Let's talk a little bit about Ramp, and actually you as a founder CEO, right? You're backed by some pretty big names: Goldman Sachs, Citi, Founders Fund, Stripe, to name but a few. $8.1 billion valuation, sales grew 4x last year. Are you struggling right now? It doesn't sound like it in this environment.
Look, I think part of I think going back to what's on top of mind for founders is, can I find software that's focused on my business that helps me spend less and helps my dollars go further? And so, well, certainly customers are spending less, and we love that, and we're here to help them. It has accelerated the interest and demand from customers for solutions like that. Last, I mean, you talk about even the events of this month, failures of other banks. Over a third of our customers actually come from word of mouth and recommendations from others. And so in terms of new business growth, this has been among the fastest years of growth, and certainly even over the past month of growth that we've ever had.
Eric, as a final question, and indeed a point of clarification, did the company bank with SVB, or you yourself personally? And by extension, what do you make about the sort of the First Citizens coming in and saving what was a really influential institution among the tech community?
First, so Ramp did not bank with SVB or have direct exposure, but ultimately we're here to support. We work with over 15,000 businesses, and several thousand of them did, and so we were there to support them through that tough period. You know, as far as First Citizens and the acquisition, we certainly wish them luck. They are, I think, a fantastic institution there to serve a lot of companies. But no matter what, our role as a partner to these companies is to serve them no matter where they choose to bank and help them get more out of every dollar an hour.
All right. Thanks to Ramp CEO Eric Lyman joining us from New York. That does it for this edition of Bloomberg Technology. Make sure to tune in tomorrow. Twilio CEO Jeff Lawson joining me live. You don't want to miss it. And there's also a lot to recap from the last few days. So check out the podcast wherever you take your podcast. You can find it on the Bloomberg terminal, as well as on Apple, Spotify, iHeart, and our other Bloomberg platforms. Really risk-on mode in these markets with technology outperforming. We get that core PCE data coming Thursday. That will tell us a lot about the Fed, the impact of higher rates or otherwise on valuations. But for now, out here in a very soggy San Francisco, thank you for listening. This is Bloomberg.